Nvidia's stock just took a nosedive, and it's not because of their earnings. In fact, their earnings were fantastic. The real reason is a new and very credible threat from one of its biggest rivals, Google. Even a blowout quarter wasn't enough to calm the nerves of investors, who are suddenly looking at the first real crack in Nvidia's armor. Today, we're breaking down exactly what Google announced, why it's sending shockwaves through the semiconductor industry, and what this looming battle means for the future of the AI chip war. We'll look at the stock drop, the paradox of a stock falling on good news, and what this means long-term for giants like Meta, NVDA, and Microsoft. This isn't just about one company. It's about a potential power shift in the most important technology of our time. For years, any talk about real competition for Nvidia in the high-end AI chip space felt, well, theoretical. That all changed this month. Google has officially made its new 7th-generation tensor processing unit, or TPU, called Ironwood, available for other companies to use. This isn't just another update. It's a direct challenge to Nvidia's throne. So what makes this chip so special? In simple terms, TPUs are what's known as application-specific integrated circuits. While Nvidia's GPUs are like a versatile Swiss Army knife, great for everything from gaming to AI, Google's TPUs are custom-built for one thing: running massive neural networks with extreme efficiency. Think of it as the difference between a high-end sports car you can drive on any road and a Formula One car built exclusively to dominate on the racetrack. Historically, Google's TPUs were powerful, but couldn't quite match the raw per-chip performance of Nvidia's best. That's no longer the case. The new Ironwood TPU has performance that is in some key metrics within spitting distance of Nvidia's brand new Blackwell series chips. But the most alarming signal for Nvidia investors wasn't just the spec sheet. It was the recent news that Meta, one of the world's biggest buyers of AI chips, is in talks to spend billions on Google's TPUs. On top of that, AI startup Anthropic has already committed to using up to 1 million Ironwood TPUs. This is the powerful validation the market was waiting for. Now let's talk about the paradox at the heart of this story. On any other day, Nvidia's latest earnings report would have been cause for a massive party on Wall Street. The company reported record third-quarter revenue of $18 billion, well above what analysts expected. CEO Jensen Huang even said that sales of their new Blackwell chips are off the charts. So why on earth did the stock fall? The answer is simple. The stock market is a forward-looking machine. It doesn't just care about past performance. It prices in what it expects to happen in the future. While Nvidia's dominance today is undeniable, the Google news introduced a new variable: genuine competition. Investors are no longer just asking if Nvidia can sell all the chips it makes today. They are asking, for the first time, what happens in a world where major customers like Meta have a real, high-performance alternative. The fear isn't that Nvidia's business will collapse overnight. The fear is that its near-monopoly pricing power could start to erode. That shift in thinking was powerful enough to completely overshadow a blockbuster earnings report. To really get why the market reacted this way, we need to talk about a concept known as the Nvidia AI Tax. This isn't an official tax, of course, but a term for the premium prices Nvidia has been able to charge for its chips. For years, if you wanted to run cutting-edge AI at scale, you had no choice but to pay whatever Nvidia was asking. Their powerful hardware, combined with the mature CUDA software ecosystem, created a competitive moat that seemed impossible to cross. This is exactly why companies like Google, Amazon, and Microsoft have been pouring billions into developing their own custom silicon. They want to control their costs and reduce their dependence on Nvidia. Google's Ironwood TPU is just the most advanced and threatening example of this strategy so far. The rise of a real alternative fundamentally challenges Nvidia's pricing power. Suddenly, the big cloud companies have negotiating leverage they never had before. The potential multi-billion-dollar deal between Google and Meta is the first concrete sign that this is no longer a theoretical threat, but a commercial reality. The fear that the Nvidia AI tax might be about to shrink is a huge reason for the stock's recent slide. This battle is just getting started, and the implications are massive. Do you think Google's TPUs can realistically break Nvidia's hold on the market? Or is the CUDA software ecosystem just too strong? Let me know your thoughts in the comments below. And if you're getting value from this breakdown, make sure to subscribe for more deep dives into the news moving the markets. This iChip rivalry isn't happening in a vacuum. The shockwaves are spreading across the tech landscape. When the news of the potential Meta-Google deal broke, it wasn't just Nvidia's stock that moved. Alphabet's stock climbed, and perhaps more tellingly, the stock of Nvidia's main GPU competitor, AMD, sank significantly. This suggests the market sees Google's in-house silicon as a bigger threat to the entire GPU market than it sees other GPU makers. But there's a counterintuitive argument that this could, in some ways, actually help Nvidia. If Google Cloud becomes more competitive because of its cheaper TPUs, it might start stealing market share from Amazon and Microsoft. To stay competitive, what would they have to do? They would likely need to double down on their own AI infrastructure, which for now means buying even more of Nvidia's best-in-class GPUs to keep up. So, what should you be watching for? First, all eyes will be on Nvidia's upcoming earnings. Are they still seeing off-the-charts demand? Second, track the adoption of Google's Ironwood TPUs. Will we see more big companies follow Meta in making major commitments to the platform? Third, keep a close eye on the spending announcements from all the big cloud companies. Where they choose to spend that money on Nvidia GPUs, their own custom chips, or these offerings will be the clearest sign of who is winning. What we're seeing is the end of the beginning for the AI hardware market. The era of Nvidia's near-total monopoly is shifting into a new phase defined by real competition. However, it would be a huge mistake to declare the king dethroned. Nvidia's fundamentals are still incredibly strong, and its CUDA software platform provides a powerful and sticky ecosystem. This isn't a story of Nvidia's imminent collapse. It's a story of the landscape becoming more competitive and more interesting. For the broader industry, this is a good thing. For investors, however, it signals a period of more volatility and uncertainty. The easy money in the iChip trade,